The biggest tech giants are now so terrified of AI, they're doubling their spending to a mind-blowing $180 billion in a single year, sending shockwaves through the market and threatening the very existence of their biggest competitors. Is this the end for private AI companies? This week, legendary investor Steve Eisman pulls back the curtain on the market's wildest shifts. Silver plunged a shocking 26% in one day. Bitcoin plummeted 24% over 4. Steve says forget digital gold. Cryptos move exactly like tech stocks, consistently declining when actual gold and silver climb. They're just speculation on speculation. Meanwhile, software giants like ServiceNow and Salesforce, they're getting obliterated, even on good news, because investors are petrified AI will destroy their existing franchises. The market has literally stopped knowing when to buy. And that AI capital expenditure? It's completely flipped. Last year, huge spending announcements were celebrated. Now, Google dropping $180 billion and Amazon projecting $200 billion? It's an AI arms race, sucking up all free cash flow. Steve poses a critical question. How can a private company like OpenAI possibly compete with that kind of funding when the numbers keep getting bigger? He says if he were an investor in OpenAI, he'd be absolutely petrified. But amidst this chaos, Steve Eisman just made 2 new personal investments.
His first pick? Charter Communications. Cable companies are dead, right? Wrong. Charter just finished a massive build-out, and its capex is projected to drop dramatically. Combined with a huge share buyback program, free cash flow per share could explode from $32 in 2025 to an insane $121 by 2029, a 54% free cash flow yield. He says the company could buy back roughly half its shares. This is no longer just a value stock, it's a value stock with a story. His second pick is Meritage Homes, a small-cap home builder aggressively buying back stock at tangible book value. If proposed affordability plans materialize, this entry-level builder could become a massive beneficiary. Even beating earnings isn't enough anymore. Google and Amazon crushed it, but their colossal AI spending forecasts spooked investors, reversing last year's euphoria. And Qualcomm, weak guidance because the global memory chip supply is now being diverted entirely to AI data centers, ripping capacity straight out of smartphone production. This isn't just a market shift, it's a fundamental rewiring of the global supply chain, driven by the insatiable demands of AI, leaving entire industries scrambling for scraps. As we mentioned, this video summarizes content from another source and does not reflect our own view and is not financial advice.
Follow the link to the video in the description to see the full video.